Bắt đầu từ lĩnh vực chứng khoán, Yuanta đã không ngừng nghiên cứu, mở rộng và khai thác các giải pháp tài chính khác nhau để đem lại sự phát triển bền vững và mang đến nguồn thu nhập thịnh vượng cho các nhà đầu tư. Với định hướng phát triển trở thành tập đoàn tài chính hàng đầu tại thị trường châu Á, tập đoàn tài chính Yuanta chính thức được thành lập và trở thành một trong những tập đoàn tài chính, ngân hàng chứng khoán lớn nhất tại Đài Loan hơn một thập kỷ qua. Năm 1961, chứng khoán Yuanta được thành lập là một trong 14 công ty chứng khoán đầu tiên tại Đài Loan. Năm 1995, trở thành công ty chứng khoán lớn nhất Đài Loan. Năm 1998, bước vào thị trường Thái Lan, từ vị trí thứ 26 vươn lên dẫn đầu. Năm 2001, liên minh chiến lược với tập đoàn Siemens Singapore để phát triển kinh doanh ở khu vực Đông Nam Á. Năm 2006, mua và sở hữu 44,68% vốn điều lệ của công ty chứng khoán đệ nhất tại Việt Nam. Năm 2007, sáp nhập với công ty tài chính Phu Hoa, đổi tên thành tập đoàn tài chính Yuanta. Năm 2011, mua lại công ty New York Life Taiwan, đổi tên thành Yuanta Life Insurance. Năm 2014, mua lại công ty chứng khoán Tông Giang và đổi tên thành Yuanta Securities Korea. Năm 2015, mua lại ngân hàng Tông Giang Saving Philippines và đổi tên thành Yuanta Saving Bank. Mua lại BTM Capital và đổi tên thành BT Yuanta Securities Indonesia. Năm 2016, Yuanta đã mua lại KK Trade Thái Lan, đổi tên thành Yuanta Securities Thái Lan. Cũng trong năm 2016, mua lại Hanshin Saving Bank Hàn Quốc và đồng thời cũng mua lại Tachong Bank Đài Loan. Năm 2017, tăng tỷ lệ sở hữu tại công ty chứng khoán đệ nhất Việt Nam lên 99,95% và tiếp nhận quản lý điều hành công ty. Năm 2018, chính thức ra mắt công ty chứng khoán Yuanta Vietnam và chuyển hội sở chính về thành phố Hồ Chí Minh, đồng thời khai trương chi nhánh tại Bình Dương và Đồng Nai. Với bề dày kinh nghiệm và những thành tựu đáng tự hào mà Yuanta đã đạt được trong hoạt động môi giới chứng khoán, ngân hàng đầu tư và tư vấn tài chính ở nhiều thị trường khác nhau ở châu Á, công ty chứng khoán Yuanta Vietnam tự tin kế thừa từ tập đoàn tài chính Yuanta những kiến thức, kinh nghiệm và nguồn lực hỗ trợ mạnh mẽ để mang đến những dịch vụ chất lượng cao và giải pháp tài chính hiệu quả cho các nhà đầu tư tại Việt Nam. Yuanta Vietnam cũng sẽ là cầu nối cho các doanh nghiệp Việt Nam với các thị trường vốn ở khu vực châu Á và thế giới.
Tập đoàn Yuanta có thể cử những cái nhân sự đến để làm việc phát triển cái thị trường Việt Nam, cũng như là chuyển giao những cái kiến thức quản lý cũng như là công nghệ, đặc biệt là quản trị rủi ro cho Yuanta Việt Nam. Ở Việt Nam, Yuanta có thể tận dụng được cái mạng lưới và cái nền tảng khách hàng của tập đoàn Yuanta ở khu vực châu Á. Chỉ riêng tại Đài Loan chúng tôi đã có hơn 4 triệu khách hàng. Chính vì thế chúng tôi có thể kết nối được rất là nhiều khách hàng hay có cái nhu cầu đầu tư vào Việt Nam. Dù thị trường chứng khoán Việt Nam đã bắt đầu đã hơn 17-18 năm nay, tuy nhiên là hiện nay Việt Nam cũng chỉ có hơn 2 triệu tài khoản của nhà đầu tư. Đó là một con số rất là khiêm tốn và chúng tôi tin rằng là cái tiềm năng phát triển sẽ còn rất là lớn.
Đặc biệt, hệ thống giao dịch trực tuyến của Winner với đầy đủ các sản phẩm tài chính sẽ là giải pháp toàn diện giúp các nhà đầu tư giao dịch và quản lý hiệu quả, chuyên nghiệp nhiều loại tài sản đầu tư.
Tập đoàn Yuanta tại Đài Loan dẫn đầu thị phần về giao dịch trực tuyến. Winner là một ứng dụng giao dịch trực tuyến tại thị trường Việt Nam, hứa hẹn sẽ mang đến những xu hướng mới nhất cho thị trường Việt Nam và thay đổi cái cách đầu tư của khách hàng.
Yuanta có cái kỳ vọng là sẽ kết nối những cái cơ hội đầu tư ở Việt Nam cho các khách hàng của mình ở những cái thị trường khác, ví dụ như là Đài Loan, Hàn Quốc, Trung Quốc và Đông Nam Á. Chúng tôi tin rằng là chúng tôi có đủ nguồn lực về tài chính, về nhân sự và chúng tôi có đủ kinh nghiệm để chúng tôi có thể phát triển Yuanta Việt Nam trở thành một trong những công ty chứng khoán hàng đầu.
Yuanta Securities, we create fortune. Bắt đầu từ lĩnh vực chứng khoán, Yuanta đã không ngừng nghiên cứu, mở rộng và khai thác các giải pháp tài chính khác nhau để đem lại sự phát triển bền vững và mang đến nguồn thu nhập thịnh vượng cho các nhà đầu tư. Với định hướng phát triển trở thành tập đoàn tài chính hàng đầu tại thị trường châu Á, tập đoàn tài chính Yuanta chính thức được thành lập và trở thành một trong những tập đoàn tài chính, ngân hàng chứng khoán lớn nhất tại Đài Loan hơn một thập kỷ qua. Năm 1961, chứng khoán Yuanta được thành lập là một trong 14 công ty chứng khoán đầu tiên tại Đài Loan. Năm 1995, trở thành công ty chứng khoán lớn nhất Đài Loan. Năm 1998, bước vào thị trường Thái Lan, từ vị trí thứ 26 vươn lên dẫn đầu. Năm 2001, liên minh chiến lược với tập đoàn Siemens Singapore để phát triển kinh doanh ở khu vực Đông Nam Á. Năm 2006, mua và sở hữu 44,68% vốn điều lệ của công ty chứng khoán đệ nhất tại Việt Nam. Năm 2007, sáp nhập với công ty tài chính Phú Hoa, đổi tên thành tập đoàn tài chính Yuanta. Năm 2011, mua lại công ty New York Life Taiwan, đổi tên thành Yuanta Life Insurance. Năm 2014, mua lại công ty chứng khoán Tông Giang và đổi tên thành Yuanta Securities Korea. Năm 2015, mua lại ngân hàng Tông Giang Saving Philippines và đổi tên thành Yuanta Saving Bank. Mua lại BTM Capital và đổi tên thành BT Yuanta Securities Indonesia. Năm 2016, Yuanta đã mua lại KK Trade Thái Lan, đổi tên thành Yuanta Securities Thái Lan. Cũng trong năm 2016, mua lại Hanshin Saving Bank Hàn Quốc và đồng thời cũng mua lại Tachong Bank Đài Loan. Năm 2017, tăng tỷ lệ sở hữu tại công ty chứng khoán đệ nhất Việt Nam lên 99,95% và tiếp nhận quản lý điều hành công ty. Năm 2018, chính thức ra mắt công ty chứng khoán Yuanta Vietnam và chuyển hội sở chính về thành phố Hồ Chí Minh, đồng thời khai trương chi nhánh tại Bình Dương và Đồng Nai. Với bề dày kinh nghiệm và những thành tựu đáng tự hào mà Yuanta đã đạt được trong hoạt động môi giới chứng khoán, ngân hàng đầu tư và tư vấn tài chính ở nhiều thị trường khác nhau ở châu Á, công ty chứng khoán Yuanta Việt Nam tự tin kế thừa từ tập đoàn tài chính Yuanta những kiến thức, kinh nghiệm và nguồn lực hỗ trợ mạnh mẽ để mang đến những dịch vụ chất lượng cao và giải pháp tài chính hiệu quả cho các nhà đầu tư tại Việt Nam. Yuanta Việt Nam cũng sẽ là cầu nối cho các doanh nghiệp Việt Nam với các thị trường vốn ở khu vực châu Á và thế giới.
Tập đoàn Yuanta có thể cử những cái nhân sự đến để làm việc phát triển cái thị trường Việt Nam, cũng như là chuyển giao những cái kiến thức quản lý cũng như là công nghệ, đặc biệt là quản trị rủi ro cho Yuanta Việt Nam. Ở Việt Nam, Yuanta có thể tận dụng được cái mạng lưới và cái nền tảng khách hàng của tập đoàn Yuanta ở khu vực châu Á. Chỉ riêng tại Đài Loan chúng tôi đã có hơn 4 triệu khách hàng. Chính vì thế chúng tôi có thể kết nối được rất là nhiều khách hàng hay có cái nhu cầu đầu tư vào Việt Nam. Dù thị trường chứng khoán Việt Nam đã bắt đầu từ đã hơn 17-18 năm nay, tuy nhiên là hiện nay Việt Nam cũng chỉ có hơn 2 triệu tài khoản của nhà đầu tư. Đó là một con số rất là khiêm tốn và chúng tôi tin rằng là cái tiềm năng phát triển sẽ còn rất là lớn.
Đặc biệt, hệ thống giao dịch trực tuyến của Winner với đầy đủ các sản phẩm tài chính sẽ là giải pháp toàn diện giúp các nhà đầu tư giao dịch và quản lý hiệu quả, chuyên nghiệp nhiều loại tài sản đầu tư.
Tập đoàn Yuanta tại Đài Loan dẫn đầu thị phần về giao dịch trực tuyến. Winner là một ứng dụng giao dịch trực tuyến tại thị trường Việt Nam, hứa hẹn sẽ mang đến những xu hướng mới nhất cho thị trường Việt Nam và thay đổi cái cách đầu tư của khách hàng.
Yuanta có cái kỳ vọng là sẽ kết nối những cái cơ hội đầu tư ở Việt Nam cho các khách hàng của mình ở những cái thị trường khác, ví dụ như là Đài Loan, Hàn Quốc, Trung Quốc và Đông Nam Á. Chúng tôi tin rằng là chúng tôi có đủ nguồn lực về tài chính, về nhân sự và chúng tôi có đủ kinh nghiệm để chúng tôi có thể phát triển Yuanta Việt Nam trở thành một trong những công ty chứng khoán hàng đầu.
Yuanta Securities, we create fortune.
Xin chào mừng quý vị khán giả đến với buổi hội thảo trực tuyến ngày hôm nay được tổ chức bởi công ty chứng khoán Yuanta Việt Nam. Tôi là Quốc Khánh, rất là vinh dự sẽ làm người điều phối của chương trình ngày hôm nay. Trước khi bắt đầu chương trình thì tôi xin được phép có một vài lưu ý nhỏ đối với quý vị khán giả đang có mặt trong phòng Zoom của hội thảo trực tuyến ngày hôm nay. Đây là buổi hội thảo trực tuyến được phát sóng trực tiếp trên các kênh như là Facebook của Yuanta Việt Nam, YouTube của Yuanta Việt Nam và đặc biệt là chào đón quý vị khán giả trong phòng Zoom. Và trong buổi hội thảo ngày hôm nay sẽ là được thực hiện bằng ngôn ngữ tiếng Anh bởi vì chúng ta có 2 vị diễn giả nước ngoài. Do đó là chúng tôi có hỗ trợ phần phiên dịch song song Anh-Việt. Với những quý vị khán giả đang có mặt trong phòng Zoom thì quý vị có thể chọn phần âm thanh cho tiếng Việt hoặc tiếng Anh bằng cách là chúng ta bấm vào một cái biểu tượng quả địa cầu ở phía bên dưới. Vâng, nếu quý vị ở trong phòng Zoom thì chúng ta nhìn vào cái thanh công cụ ở hàng dưới. Ở gần phía bên phải thì có một cái biểu tượng quả địa cầu với dòng chữ là thông dịch hoặc là translator. Quý vị có thể bấm vào và chọn ngôn ngữ tiếng Việt để chúng ta có thể nghe cái phần phiên dịch từ phần diễn thuyết của hai diễn giả nước ngoài. Nếu quý vị nào có thể nghe được tiếng Anh thì chúng ta không cần cái lựa chọn này. Nên rất mong là quý vị khán giả chúng ta có thể theo dõi chương trình. Đặc biệt là những khán giả trong phòng Zoom thì có thể lựa chọn phần này. Thì quý vị, đây là cái phần mà chúng tôi sẽ hỗ trợ. Và bắt đầu từ bây giờ thì chúng tôi xin được bắt đầu chương trình hoàn toàn bằng tiếng Anh do hai vị khách mời chúng ta là người ngoại quốc. Xin được bắt đầu ngay bây giờ. Nếu quý vị trong suốt quá trình diễn ra sự kiện có bất kỳ vấn đề hoặc là thắc mắc không câu hỏi nào thì quý vị có thể gõ chữ vào trong cái ô Q&A hoặc là ngay cả khung chat ở trong Zoom hoặc là trong phần comment của Facebook hoặc là YouTube Yuanta. Thì chúng tôi sẽ có đội ngũ tổ chức sẽ giải đáp các thắc mắc liên quan đến các vấn đề về phiên dịch hoặc là các câu hỏi. Mọi người đã thấy được cái nút phiên dịch chưa ạ? Nhờ đội ngũ tổ chức có thể theo dõi các phần comment hoặc là câu hỏi của khán giả để chúng ta kịp thời giải đáp thắc mắc, để chúng ta có thể bắt đầu chương trình ngay bây giờ. Vâng. Chúng tôi xin nhắc lại là cho phần phiên dịch song song Anh Việt, quý vị trong phòng Zoom của hội thảo có thể bấm vào biểu tượng quả đi cầu ở bên dưới, biểu tượng quả đi cầu với chữ thông dịch hoặc là tiếng Anh là translator. Quý vị bấm vào và chọn ngôn ngữ tiếng Việt nếu mà chúng ta cần nghe phiên dịch, bởi vì ngôn ngữ của buổi thảo luận ngày hôm nay sẽ hoàn toàn bằng tiếng Anh. Và trong suốt quá trình diễn ra thì quý vị nếu có câu hỏi thắc mắc hoặc là đặt câu hỏi cho các diễn giả thì chúng ta có thể, một là gõ chữ vào phần comment trên Facebook hoặc YouTube, hai là chúng ta gõ thẳng vào trong ô chat hoặc là ô Q&A trong phòng Zoom của hội thảo trực tuyến. Thì ban tổ chức sẽ có người sẽ giải đáp thắc mắc và thu nhận các câu hỏi. Và chúng tôi cũng xin thông báo luôn, chúng tôi ngày hôm nay sẽ có 5 phần quà may mắn dành cho 5 quý vị khán giả đặt những câu hỏi hay nhất gửi về cho các vị diễn giả. Đó là 5 cục sạc dự phòng điện thoại cho khán giả ngày hôm nay. Thì quý vị hãy nhớ và chúng ta chuẩn bị những câu hỏi dành cho các diễn giả, và ban tổ chức sẽ có người ghi nhận thông tin này để gửi tặng phần quà cho quý vị sau chương trình. Hy vọng là mọi người chúng ta những người có nhu cầu nghe phiên dịch thì chúng ta có thể thấy được cái phần những cái công cụ chức năng để chúng ta bắt đầu chương trình ngày hôm nay. Nếu quý vị khán giả nghe rõ âm thanh tôi đang nói và hình ảnh không có vấn đề gì thì xin có thể gõ số 1 vào trong ô chat được không ạ? Để chúng tôi kiểm tra cái đường truyền, vì chúng ta làm hội thảo trực tuyến, mọi thứ đang được phát sóng trực tiếp trên các kênh, nên là xin được phép hỏi quý khán giả là chúng ta có nhìn rõ chương trình không ạ? Nếu nhìn rõ, nghe rõ thì mọi người có thể đánh số 1 vào trong ô chat được không ạ? Hoặc là đánh số 1 vào trong phần comment. Rất cảm ơn mọi người đã tham gia trực tuyến ngày hôm nay. Vâng. Nếu mọi người nghe rõ thì tôi xin phép được bắt đầu chương trình ngày hôm nay, và xin nhắc lại chương trình sẽ diễn ra hoàn toàn bằng tiếng Anh. Cho phần phiên dịch, quý vị có thể bấm vào biểu tượng quả đi cầu phía bên dưới trong phòng Zoom cho phần ngôn ngữ tiếng Việt. So good morning. Welcome to a livestream webinar organized by Yuanta Securities Vietnam. My name is Quốc Khánh. Very happy to be the host of the show today. So in 2021, Vietnam's economic growth has slowed down significantly due to the impact of social distancing and lockdown because of COVID-19. And the temporary closure of factories and business facilities really affected the third quarter GDP growth of Vietnam. And at the beginning of the fourth quarter, social distancing measures were relieved as the pandemic was under control and the vaccination program were implemented effectively across the country. However, commodity prices are showing signs of strong increase due to the global expansion of monetary and fiscal policies and logistics concessions. Does that lead to inflation risk in the future, especially in the coming up 2022? And will rapidly changing of new virus variants continue to affect the global economic recovery in general and in Vietnam in particular? What are some of the strategies for the investor to protect their investment and look for new opportunities? This question will be answered today by our guest speakers. With this seminar, we have the topic, Stock Market Outlook for 2022, Access, Allocation, and Effective Investment. I'm very honored to welcome joining the show today our two guest speakers, Dr. Yen Chen Hui, strategist from Yuanta Investment Consulting. Dr. Yen, can you hear me?
Vietnam.
All right, good to see you. And we have Mr. Matthew Smith, Head of Institutional Research of Yuanta Securities Vietnam. Hi, Matt, can you hear me?
I can hear you fine, Con. Thank you, and good morning.
All right, good to see you. Good morning. I would like to kick off our discussion today with the first section that's focusing on macroeconomics. So in the coming up year, 2022, the Vietnam's economy is expected to recover rapidly as the country has adapted to the pandemic situation, and I guess the social distancing and lockdown measures will continue to be relieved. The expansionary monetary policy, underlined by low interest rate, should facilitate the economic growth of the country. Besides, expansionary fiscal policy and public investment should continue to play a very important role to drive the economic growth of Vietnam. And eventually, free trade agreements, FTAs, will continue to strengthen, drive international trade, and attract FDI flows in the long term for the country. Eventually, so what are the opportunities and challenges for Vietnam? We have to listen to Dr. Yen with his presentation now. So please, Dr. Yen, the strategist from Yuanta Investment Consulting, please.
Hello, everybody. This is Dr. Yen of Yuanta Investment Consulting in Taipei. After such a bullish past year, I believe everyone has made a lot of money. So now at this moment, end of year and looking forward into the next, how should we look at year 2022? Simply speaking, 3 facts to take notice. First, the global economy finally returned to the normal that we have been waiting for so long. This time with much more broad-based growth. And with that, the second thing is we should face longer-term inflation expectation around the world. But I tell you why you don't need to worry. Although inflation is coming in 2022, it will not be stagnation. Third and last, what is the better mentally to use in 2022? I would say the word normalcy. But I tell you, this is just how you will handle your daily routine work around the neighborhood. Normalcy does not mean you should be afraid that this market become a bear market. But I believe the best recipe is to invest like a value investor. So let us start with why will the global economy finally return to normal in 2022? The critical argument here is most of the serious supply chain struggle we saw this year will either be solved or gradually back to normal during 2022. We can see from this chart, next page, while we are experiencing the most serious global supply chain crisis right now, all of this actually started from March of last year. Last year's March, at the beginning of the pandemic, lockdowns and the mobility restriction caused both supply and demand to fall at the same time. At this, it was the sharp drop in the demand that caused everyone to have extreme pessimistic future outlook. Imagine, guys, when both supply and the demand are falling, which will fall more? Is it supply or demand? I would say supply. Think about it. During the pandemic lockdown, most people stay at home and cannot work, but you still have to eat, to drink, and play video or mobile phone game, etc. You still consume those essentials at home. So the fall in supply is more than fall in demand. At the first moment, the pandemic hit, supply cannot meet demand. But the global economy has already been gradually recovering ever since. Why is the supply chain still struggling? I think the key reason is, let us all go back to March last year and recall what the economists have been saying in June last year. The likes of the shape of recovery post-pandemic, maybe looking like some economists say, maybe looking like U-shape, some others say L-shape, some others say W-shape, or even Nike shape, just about any shape. But did you remember hearing any economist out there saying it was going to be a V-shape recovery? Out of that, the recovery we are experiencing right now to be the strongest recovery since after the World War II. I don't remember if there is any, or do you? Then, why would the strongest economy recovery in post-war history create such a serious supply chain crisis? The key issue is here. In the past 50 years of development, management theory and all businesses have made efficiency and cost the most important factor in their decision-making. Hence, when it comes to supply chain management, the so-called just-in-time is prevailing practice. What it does, every spot in the supply chain try as hard as possible to keep as few inventory as possible, but easier said than done. Please take a moment and give it a thought. How to do and doing what to make just-in-time happen. Imagine, let's use mobile phone production as an example. From downstream OEMs to upstream component maker, you cannot really wait until Apple actually place an order, or when you see consumer actually start making purchase and then start to prepare production factor, such as find factory, such as source input material and book production line, etc. You have to plan and prepare ahead. Guys, how to plan and prepare ahead? By forecasting, of course. But no one had predicted this recovery to be V-shaped. Therefore, putting you under-prepared in production factor, like factory input material and production bookings, etc. And things get messy when you look for those in a hurry. The next question is, though you can say the supply chain crisis in 2020 was understandably due to forecasting mistake, and perhaps arguably the same for 2021, that no one predict a V-shaped recovery. What about 2022, when everyone already knew it was a V-shaped recovery? Let's get it wrong 2 years in a row. Shame on our economists. Would it be possible that forecasters get it that wrong on 2022 outlook? I don't see that likely. So at this moment, as we are entering the next year production cycle, as expected the supply chain to run much smoother. Another important thing to know is the severe marine shipping capacity shortage, logistic problem that made the supply chain matter worse was not because there are not no ships. It was because port processing capacity was down, causing ship congestion at the port. Because there are not enough dock workers and truck drivers on duty on shore to offload and ship away containers. Port congestion, you can think of it like traffic jam in rush hour. As long as there are more cars coming in than cars going out, it will stay congested. No way around. How to solve it? Well, one and only one. Wait until midnight when it is off peak, when there is no more cars coming in. The low season of every year's production cycle is around the Lunar New Year, when there is lesser production. The Americans still have to work. There will be an irregularly work schedule during the time, allowing them to digest the congestion at port. As port congestion gets relieved, so will supply chain return to order. Then, with order re-established in the production side, we see the global economy improving in the second and the third quarter of 2022. But not all supply chain issues get cured by that time, as some of them are longer-term structural supply shortage, and not just because disruption. For instance, during the process of humanity pursuing transition to a digitalized world, trending in 5G, AI, IoT, EV, etc., has and will create huge demand for semiconductor. There is no quick way to meet such an enormous demand in semiconductor. As all you will know, the lead time from CapEx to production in semiconductor is pretty long. So supply should still be tight in this area. But at least with the rest of the supply chain back to order, the allocation of semiconductor capacity could be much rational and orderly, rather than scramble in this time and last. So our call is, between now and the Lunar New Year, it's still high season. No solution to supply chain just yet. As price remain what will cause higher inflation. But after the Lunar New Year, you will see more back to normal in the global economy. But some people will then ask second question. Indeed, production get back to normal, but will there be a demand? Here is where it come from. In this year and the last, due to the pandemic, consumer may have bought too much of certain category of semi-durable or capital goods type of merchandise, the likes of laptops, home electric appliance, mobile phone, tablet, etc., at the cost of overdrafting future consumption demand in 2022 or even 2023. People holding the view will show you what? Like the red line, next page, like the red line in the left-hand side, this chart. This is the red line, total global trade value in US dollar. And they will say, not this slide, not just it had made a record high, apparently. It has been above and greatly deviated from the longer-term trend. But hey, there is a little thing when you look at this value number. It includes effect from both price and the volume. When you only look at the volume, you can tell better if we did indeed overconsume. The black line in this chart shows the global trade volume. And you can see global economy has been recovering in a V-shaped recovery, but it hadn't deviated from the trend, just back in the line with the trend. Starting from here, the natural question to ask is, since we have already returned to the longer-term trend, then how should we make forecasts for 2022 global economic growth rate? Guys, Global economic growth is obvious, not going to be better than 2021, as the low base is not going to be there anytime. But since we are already back in line with trend, you can take the longer term average of the past and apply. That is one part of it. The other part of the question is, which part of economy will that big growth be? The pressing issue of 2022, it could be the year, I think, it could be the year of distribution. You may have bought too many laptops, but you probably have not bought too many servers. So while the aggregate number may not be maybe set, there could be better off and worse off sector within. The logic applies to the nation as well. The right-hand side, the black line shows the longer-term growth trend from the past. While the global growth was returned to the trend, some countries are above the trend and some others yet above the trend. As you may know, recovery in 2021 was uneven, and many emerging markets nations in particular have not enjoyed the strength of the recovery due to less prioritized access to vaccine and medical resources. The second reason why I see the global economy return to normal, along with the relief of supply chain issue, is the vaccine and the COVID antiviral drug will become available and abundant to a lot more emerging market nations. And things can be improved a lot for them. For while the year of 2021 is characterized by a word uneven, the year 2022 could be the year of broader base growth. As the pendulum may swing back a bit to nations that will hold back in 2021. Why am I saying that? Look at this chart. Look at this chart. Horizontal axis is the nation manufacturing PMI. Vertical axis is the nation vaccination coverage rate. Obvious, it shows a positive slope. The more vaccine available to a nation, the better its economy performs. And with improved access to vaccine across the globe and the COVID antiviral drug, which production could ramp up really fast upcoming. Basically, you could count on more nations return to normal in 2022. However, not everything of returning to normal is bullish for market. Policy would not be so outright accommodated like 2021. Every time since in history, policy effects have always diminished in the second year after recession. Same thing this time. That means in 2022, you cannot expect all assets, good or bad, to all rise on floating waters the way it did this year. Instead, investors will also have to go back to their normal mentally. As 2022 will be, I think, will be market where fundamental matters. As you may notice, this chart, major institutions see that as well. Their 2022 economic outlook forecast truthfully indicate to us that 2022 will not grow faster than this year. Just impossible. No need to be disappointed. Folks, growth in line with longer-term trend isn't going to be the end of bull market, nor will it bring us huge systematic risk either. Next, let's talk about inflation. Next page. The inflation we are experiencing now, we call it longer transitory period. No matter how you look at this, on any standard, inflation is high in all nations. It is pervasive across the globe. Then how will inflation develop moving forward? Right now, just like a traffic jam, we are still at a peak hour and the cars still coming in. Supply chain are still serious bottlenecks. So inflation rate pressure will still be very high before Lunar New Year. However, the supply chain use the Lunar New Year low season to regain order. So we believe inflation pressure will roll back somewhat in the first quarter of 2022. But the next question is, even with some rollback, will inflation return to 2% range or below that we were so used to in the past? No. We have to get used to, I think we have to get used to a period of time of somewhat higher inflation. And what do you mean? What do we mean by higher? From today's standard, I would say around 3% to 4% inflation in advanced economies. Why? 3 reasons. Next page. First is infrastructure spending. The spending bill has just been passed and will execute starting next year. Second is the return and the deferred demand. As we have said minutes ago, right now only in advanced economies are at normal and have demand. But as vaccine and antiviral drug become available, demand for other parts of the world will recover. Third, and the most reason to higher inflation is supply chain reshuffle. The forces is, first, U.S. decoupling from China. They will make one world, two systems. That means higher production costs. Second, global supply chain will shift from long chain to short and fragmented chain, because people now worry more a supply chain too long and the specialization too piecemeal will make the supply chain fragile. Any one point get hit, the entire chain will break down. So people now will sacrifice cost and efficiency for anti-fragility, make supply chain shorter and fragmented. That also means higher production costs. 3, I think, and the most important, the current wave of energy crisis, which is frankly speaking, linked to pursuit of carbon neutrality. First, achieving a low carbon economy will inevitably driving up inflation pressure for a period of time. Let us use the crude oil industry as an example. You hear a lot of people saying, hey, we are moving toward low carbon economy. Oil price will be low because people will all be driving EV electric cars. Sure, this sure can be true in a long time. But in the short run, during this transition period, that is not the case. Why? Take a think. You will not wake up tomorrow and suddenly find everyone all driving Tesla. That cannot be happen overnight. The demand shift away from petroleum is going to be gradual. But how about supply? You notice many nations are pursuing for ESG, CSR, carbon neutrality. No one wants to invest in high emission company anymore. So those big oil companies, the oil field exploration and drilling company, harder for them to get funding. And when they make a decision on whether to drill or not, they not only consider current oil prices, but also future oil prices decade down. So they invest less, causing an underinvestment when it comes to fulfilling current demand. So a gradual demand shift and underinvestment will result in higher oil prices for now. These 3 forces will keep inflation relatively elevated for a period of time. But relax, higher inflation does not necessarily mean stagnation, because corporations have really made a lot of money in the past few years. You can see on this chart, the yellow dot represents the most current quarter. The profitability of US listed companies by industry sector, and the boxes are their historical range. It is not the tech sector, not only tech sector make money. It is everyone make lots of money for a couple of years already. So the corporate are financially in very good shape and their cash level are high. Think about it. corporate have cash, but cash will depreciate with inflation. Inflation comes, what would they do? They will spend money, but where? Spend where? Capital expenditure, I forecast. And what is GDP? Everybody knows CIG and export. With corporation doing more capex, GDP will not be low. So it is not going to be stagnation. On consumption, we say inflation is not going to hurt by much. When inflation comes, if consumers do not have savings, then yes, it will squeeze out consumption. But since the pandemic outbreak, we have gone through a period of time where people have been limited on what they can consume, and saving rate around the world has been high. This chart is each advanced economy's accumulated excess savings since the outbreak of pandemic. And it is not just the US. Every advanced country has had high savings. While high inflation does hurt real income, but if you have savings, at least you have the ability to spend. So a lot of people ask me, what does the global economy look like in 2022? I think the industry will regain order in the first quarter, and the second and the third after that, rather than stagnation, you will have enter a period of economy overheating before you even get to stagnation. Now, let's talk about our opinion on Vietnam economy. The conclusion is the worst is behind. Future is bright. This chart, next page. This chart shows Vietnam economic growth rate and the daily COVID confirmed cases count. You can see from the beginning of the pandemic outbreak in 2020 to the first half of 2021, Vietnam was among the nations around the world that did the best job to fend off the pandemic, where the economy was actually able to avoid entering a recession at the start of global pandemic in 2020 and maintain growth rate at around 5% until the first half of this year. Unfortunately, the COVID situation got out of hand in the third quarter this year due to the emergence of the Delta variant and the other variants, and the relatively lack of access to early vaccine supply as the economy entered a recession as a result. But from this chart is the Washington University's COVID confirmed cases forecast. This wave of infection has been gradually under control with strict measures orders by the government. While there is risk associated with the increased population movement during the upcoming Lunar New Year, but it is generally expected the COVID situation will finally be contained in 2022. I think Vietnam will be able to continue to keep the infection under control from 2022 and beyond, as Vietnam has the chance to truly achieve a lifestyle to coexistence with COVID. The reason is, next page. The reason is Vietnam is catching up with the progress of vaccination rate. The next question is, how high does the vaccination rate has to be for the economy return to normal? This chart plots the manufacturer PMI and the vaccine coverage rate of the US and the European Union during this year. From their experience, you can see once the vaccination rate got to rise to 40%, economic activity have largely gone back to normal. This means even if the pandemic still lingers on and sometimes cases rise again due to variant, it is unlikely production activity get disrupted once again. While vaccine and even oral antiviral drug cannot fully prevent us from infection, they can greatly reduce chance of severe illness with the help of higher vaccination coverage ratio and the availability of oral drugs. it is possible to control the consequence if a COVID outbreak to that comparable to the flu. According to the Washington University forecast, Vietnam vaccine coverage ratio is expected to reach 50% of population in early 2022, which is the label when the Americans and the Europeans resume regular economic activity. Then, what will the back to normal Vietnam economy look like? High growth rate, moderate inflation, and expanding current account surplus. This chart is IMF's Vietnam economic growth forecast. I think there is no need to talk about growth. People are more concerned about Vietnam's inflation may rise in 2022. I think investors should just take a break and treat rising inflation with sense of normalcy. Two reasons. First, the global supply chain will run more smoother next year. Hence, inflation will be the result of stronger demand rather than supply issue. So it is not stagnation. Second, although the Fed will gradually tighten up in 2022, but people do not need to worry about affecting Vietnam, as Vietnam export growth will also accelerate, causing the current account surplus to further expand. That means the Vietnam economy is capable of creating dollar reserve, and the capital flow will not have such a big impact on the economy as they may have in the past. So I may conclude a driver of Vietnam economic growth in 2022. Next page, this page, yeah. There are three cyclical factors: reopening, stable currency, inflation under control, and the two long-term drivers. First is infrastructure. Second is urbanization. That means Vietnam market is where investors should not miss. Finally, greeting to you all in the year of tiger. Pounce like a tiger, keep momentum like a tiger. Thank you very much.
No, thank you, Dr. Yan. Thank you, Dr. Yan, strategist from Yuanta Investment Consulting, for the presentation on macroeconomic. I guess we would like to move on to section 2, look at the sector's outlook. Given the optimistic picture of Vietnam's long-term macroeconomic growth, what sector would be the most compelling? Which stocks would be the most attractive for the investors? Here comes the presentation of Mr. Matthew Smith, Head of Institutional Research of Yuanta Securities Vietnam. Matt?
Hi, good morning, everyone. Can we see the presentation? There it is.
Yes, yes.
Okay, great. So there's your tiger for you. Dr. Yen just laid out the case for a positive outlook on the macro for Vietnam specifically in the year of the tiger, and that's something that I agree with. I think the longer term thematics are continuing that really haven't changed, and they won't change just because we're changing the calendar, and that is Vietnam's gradual emergence as the next tiger economy. You may recall the tiger economies were basically Korea and Taiwan and Singapore and Hong Kong back in the 1990s, and these were high growth economies that were relatively small but emerged very rapidly. And now really are all four of these are high really developed markets at this point. And I think Vietnam is maybe the last one to emerge from this process. But anyway, Ben is taking care of my slides. He's already turned to the first page. That is looking at what we already know, which is how the market has already performed over the past year or so. Year to date, the Vietnam market is up about 33% in US dollar terms. Really, but we've been rallying in this bull market for 21 months since March of 2020. My view is that it's going to continue in 2022. Maybe we won't see the same kind of returns that we've seen over the past 21 months, but I think the market continues to rally. driven by some fundamental factors, which I'll talk about shortly. Can we see the next page, Ben? So this is looking at Vietnam in relative to other markets. The chart basically shows the two indexes that you guys know, the VN index, which is the Ho Chi Minh City Stock Exchange, and really that's what we focus on in institutional broking, is up 33% year to date. The VHI, which is the Hanoi Stock Exchange, is up 123%, and that's really probably one of the best performing indexes in the world in 2021. But the broader main board of the VNI is up 33%. As I said, that's ahead of all of the markets in Asia, the exception there being Sri Lanka, which is up 54%. And that's interesting because I think that some of these broader themes that Dr. Yen discussed, such as the migration of manufacturing from China into other countries, and most notably Southeast Asia, really affects these two countries the most. I think Vietnam and Sri Lanka are probably the two largest beneficiaries of this sea change in global manufacturing supply chains. So that's an interesting point. The other thing I would mention here is looking at, actually there's three indexes in this chart that relate to Vietnam: the VNI and the VHI. The VHI has outperformed, and as you know, the VHI is dominated by small and mid caps. There's a third index here which relates to Vietnam, which is the MSCI Vietnam Index, and that index is only up 21%. And what's in that index? Well, that's an index that is maintained by MSCI, which is an enterprise that basically controls global indexes, and it only includes large caps and very liquid names that trade a lot in the stock market. And this is because the customers of MSCI are investment funds, basically our clients, who can only invest in large cap names, and they need a certain amount of trading liquidity, which is actually quite high. So the MSCI Vietnam maybe contains, I think, about 12 names, and they're all open FOL shares. There are no shares here that have reached their foreign ownership limit. So some of the high flyers that are in the MSCI Vietnam include stocks like HPG, which has obviously done very well this year, but also some names that have underperformed, such as the Vingroup companies and Vinamilk, which is also, I think it's actually down year to date, one of the few names that's down. So that really just shows you what I think we already know, which is that small caps have outperformed, and I think that some of the full FOL names have also outperformed. But let's stop talking about 2021 and talk about 2022. So first, basically, we've got a positive case on the index, and this is being driven by three major drivers. First, the fundamentals are solid. And what do I mean by fundamentals? Maybe you can see there's a bookcase behind me that's filled with finance books, and we can sit down and study all those if you want. But I think a very simple way of looking at fundamentals is profitability, cash flow, and really earnings growth. Earnings growth for the Vietnam market in 2022 and 2023 are expected to be the highest in the region, higher than anywhere else in ASEAN and Asia. Could you go back, Ben? I'll tell you when to turn, please. The second sort of plank of my bullish case is liquidity conditions, which remain robust. As Dr. Yan pointed out, and I know there's a lot of questions about this, we don't think that the very liquid conditions in the financial markets in Vietnam are set to tighten in 2022. Now, I'm not suggesting that the central bank is going to cut rates further while the U.S. Fed raises rates. I don't think that's likely to happen. But I also don't see much room for them or much reason for them to increase rates in the money markets. And that means that banking liquidity should remain quite loose. That deposit rates, which is what investors look at as an opportunity cost, deposit rates in the state banks are likely to remain relatively low, certainly low relative to history. And that means that flows will continue to move from safe deposits into risk assets, including stocks, as well as other risk assets. And third, my third argument here is that sentiment, which is very bullish among domestic investors, should persist, should remain high. Again, fundamentals are solid and liquidity is abundant. Domestic investor accounts continue to increase. November was the highest number ever in terms of new account openings. And I think that we're likely to see those accounts be very active in 2022. This is along the lines of basically wealth emerging in Vietnam and the middle class becoming much more aware of their personal financial needs and the importance of investment. Okay, next page, please. Okay, so basically, what do I mean by fundamentals are solid? This chart kind of sums it up. The forward EPS growth forecasts for Vietnam in 2022 and 2023 are very, very bullish. The consensus, Bloomberg consensus, which is the blue lines in this chart, is for 25% EPS growth in 2022 and another 21% EPS growth in 2023. So this is basically the Bloomberg database aggregates all analysts' forecasts for the companies that they cover. That's not just Yuanta, but also all the other sell-side brokerages in Vietnam. And basically comes up with a single EPS number, and from this they can aggregate they can calculate rather what the forward EPS growth expectations are. So 25% for 2022. That is by far the highest number in all of ASEAN. Most of the markets have expectations that are in the single digits, between 5 and 10%. The only market that comes close in Southeast Asia is the Philippines, where expectations for EPS growth in 2022 are 14%. But in Vietnam, it's 25%. So I think that's the highest in all of Asia. The orange lines in this chart represent our forecast. So Yuanta Vietnam, we've got about 25 companies under coverage. We don't cover the entire market yet, so I don't think that our forecasts, which are slightly lower than the consensus, they really reflect a bearish outlook. It just happens to be that these are the companies that we're covering. I think our earnings forecast expectations for the whole market are similar to those of the consensus. So again, that's very positive. Next slide, please, Ben. So again, fundamentals are solid, but valuations, I think, are cheap. The chart on the left shows you the trailing PE ratio. So the past 12 months EPS for the VN index is at 17 times. That's the number that generally comes up in the media, but professional investors don't look at trailing earnings so much. They look at what is exhibited in the right-hand side, which is forward PE ratio. So this is the expected earnings for today's price divided by the expected earnings of 2022. And on that basis, I think we're at 13.8 times. That's cheap, especially when we consider the growth perspective. Another valuation metric that we look at, I didn't include it in the chart here, but another way to look at this is through the price to earnings to growth or PEG ratio, PEG ratio, which is basically the PE ratio divided by the expected growth. So 13.8 divided by 25% works out to 0.55 times. Now, typically any number below 1 on a PEG ratio is considered to be a reasonable price. And Vietnam today, or at least the VN index, is trading at 0.55 times, which in my opinion is still very cheap despite the outperformance that we've seen here to date. Next chart, please. Okay, so this is the PE multiples of today. That VN index is the red bar there, relative to the other markets in Asia. And again, this shows you, in my opinion, that Vietnam is relatively cheap. If we look at almost all of the markets in ASEAN, so that's Malaysia, Indonesia, Philippines, Thailand, they're all trading at higher PE multiples. In other words, they're more expensive. The only market that's cheaper is Singapore. And I can guarantee you that Singapore at 13 times PE, maybe they've got 3 or 4% earnings next year relative to 25% earnings growth for Vietnam. So I think, again, this just shows you that the market is relatively cheap versus the region. Next chart. Okay, so point 2 of my bullish outlook for the market is based on liquidity. And I think you've probably seen this before. This shows you the trading volumes in the markets for Ho Chi Minh City and Hanoi and Upcom. Average daily trading turnover in US dollar terms. In November, it hit an all-time high. And I think that this is just going to continue. Among the key drivers of market liquidity is loose monetary policy, of course, and especially low deposit interest rates. Now, bank depositors are getting less interest on their money from the bank, which tends to drive funds out of bank deposits and into risky assets, including obviously the stock market. Now, I can see that there's some concern from the questions about interest rates rising because of possible tightening moves by global central banks, such as the Fed taper. I don't think that's really, in line with what Dr. Yen was saying. I don't think that we will see further rate cuts in Vietnam, but we're a very long way from seeing a sharp rise in interest rates, in my opinion. Inflation, as measured by CPI, remains quite low. Of course, that could change. Producer prices are rising sharply. But I don't see the SBV rates policy as having any impact on global commodities pricing at all. And at the same time, the retail spending boom that we saw 15 years ago is not happening at all right now. So there really isn't a strong argument to say that the SBV should be raising. In fact, in real terms, accounting for inflation, SBV rates are still relatively high. More importantly, I think that relatively low borrowing costs are necessary to support debt sustainability among COVID-impacted borrowers. Now, this hasn't really showed up in the NPL numbers for the banks because restructured debt is not classified as NPLs. But I think we're all aware that many borrowers are under pressure. And that means that the SPV is unlikely to increase their borrowing costs and further add to those pressures in 2022. But I think for the first half of 2022, almost definitely, I would be very surprised if liquidity conditions tighten substantially. Next page. So the third leg of my bullish argument is sentiment, and sentiment among domestic investors, as you're all aware, has been quite positive. This chart shows you the monthly number of new securities accounts that have been opening. The momentum of new account opening appears to be gaining speed, with another 221,000 accounts opened for a total of, I think, 1.3 million new accounts opened in the first 11 months in 2021. So that brings us to about 4.1 million securities trading accounts that have been opened. That's more than twice what it was in 2018 when I first got to Vietnam. And I think the number of active traders has increased by even more. That 4 million accounts represents about 4% of the population, which is an interesting number. Can we see the next page, Ben? So this chart shows you Taiwanese, how Taiwan's market has developed from the very left-hand side, 1985 to 1990. The number of trading accounts in Taiwan was up by about 10 times. And the reason for this was there was a bubble economy, a bubble stock market in Taiwan over that 5-year period, where the index went from about 800 points to about 12,000. So I think the total index return in 5 years was about 13 times. The main point here is that as the index was rising, that created a huge amount of sentiment, excitement among domestic investors, who therefore went out and opened accounts and started trading stocks. As of we're not quite halfway through where Taiwan was in the 1980s in terms of the number of investors as a percentage of the population. In 1987, it was 3% of the population. I think we're probably at 4%. We're probably around about the quarter of 1988 for Taiwan. That's if history repeats. Of course, history never repeats itself exactly, and I'm not suggesting that the Vietnam stock market is going to give you 12 times returns over the next 5 years. But many of the drivers, the macro drivers of the Taiwan bubble in the 80s, are present today in Vietnam. That includes persistently low interest rates, which was a policy to support bank credit, expectations of currency appreciation after years of high GDP growth, and also years of very high current account surpluses, which I think we're starting to see that in Vietnam today. And thirdly, the discovery of stocks by a young and increasingly wealthy population. Taiwan was young and increasingly wealthy 35 years ago. And at the same time, they had few investment alternatives. Really, in Taiwan, they couldn't invest overseas, so they could basically buy property, they could buy stocks, or they could buy gold, or they could keep money in the bank. That's somewhat similar to Vietnam. I would say that one big difference to Vietnam today is that today we have other options in the form of cryptocurrencies that did not exist in Taiwan in the 1980s. So that could be drawing some interest away from risky assets such as stocks. But I think that's probably going to have more of an impact on demand for gold and precious metals. Lastly, the other similarity here is the culture. I don't know how to say this, but I think that you're all aware that Asian people sometimes have a very strong affinity for gambling and for betting their money and trying to make fast money. And I think that's somewhat similar to Vietnam today. As I said, I don't think history is going to repeat exactly, but I think it's always important to look at what has happened in the past as an indicator of what might happen in the future. Next page. All right, so this is looking at foreign net trading. I have to address this. I'm a foreigner. Foreigners have been selling. Don't blame me. Obviously, sentiment is not positive among all investors. I think so far, year to date, we're on track for net selling of about 2.7 billion US dollars worth of Vietnam stocks by foreigners in the first 11 months. And really, foreigners have been persistently net selling now since, I think, August or September of 2019. That's obviously not good. I think that this is largely a function of fund redemptions for frontier market ETFs and mutual funds. The managers of these funds are actually bullish on Vietnam, but they have to sell anyway because their own investors, the people who give them money to manage, are asking for their money back. As you saw in Dr. Yen's presentation, this is a regional problem, but it seems like Vietnam has been especially hard hit. All I can say is that the institutional investors that I speak with are all moderately to highly bullish on Vietnam. So at some point, I think that this will reverse course and that the foreigners will again become interested in Vietnam stocks. Next page. The other thing to think about when you think about total foreign net selling is that really it's concentrated in about 6 names. So if we look at the names on the left there, that's Huafat, VPB, Vinamilk, et cetera. The first 6 names down to SSI, that works out to about 2.1 billion. So that's about 80% of total net selling by foreigners is concentrated in just these 6 names. And with the exception of Vinamilk, the exception of VNM, all of them have been big outperformers year to date. So I think that what's happening there is a combination of foreigners who are taking profits because they've outperformed. Fund managers like to make sure they get paid a bonus, so they will probably sell some of the shares that have outperformed before the end of the year just to lock in those profits. But also the other driver here is sometimes stocks such as HPG, which is a large cap and has outperformed so much, it becomes too large for the foreigners to hold in their portfolios because they are limited to maximum caps on how much of any single stock they can own. They have diversification rules where maybe a fund, for example, might have a rule that says they can't hold more than 10% of their assets in one stock. And when Huafat doubles and triples in value, that means that a stake of 8% suddenly goes to 24%. They need to sell that down in order to be in line with their compliance procedures. So some of that, I think, is just really asset allocation rather than bearishness. And the other thing to think about here is the stocks on the right, which are stocks that foreigners have net bought year to date. And those includes some names there like STB Bank, obviously. Vinhomes, one of our top picks, is number 2 there. And the third one is actually the Dragon Capital's ETF, the VN Dragon ETF, which only buys full FOL names. I think that's a very interesting product because, as you know, foreigners are excluded from, I think, about 16 names now that they can't buy directly on the market because those stocks have achieved their foreign ownership limits. That means that it's difficult for foreigners to buy. All those stocks are excluded from the MSCI Vietnam, as I said previously. But by buying the VN Diamond ETF, the foreigners can get those stocks without paying any premium at all. So I think that's been a very popular product for DC and for the market as a whole. Next page. Right. So this is the every year we have the questions on MSCI, emerging markets inclusion. I'm not going to spend too much time on this because I think we want to get to Q&A. I'll keep it simple. I think that as long as the full FOL problem for foreigners being unable to buy some of the most attractive large cap names in Vietnam because they've achieved their foreign ownership limits, as long as that continues, then I'd be surprised if MSCI will allow Vietnam into the emerging markets index. I don't think it's happening in 2022. I'm sure somebody will be talking about it. It'll probably get into the media. Somebody will tell you, "Oh, it's coming." But I wouldn't bet my money on it. I think if we're lucky, we might see it in 2024. The non-voting depository receipt issue is really the what needs to happen. I don't think we're going to see that this year. Maybe in 2023, 2024, that might be the best. At the moment, I think the government has other more important considerations on their mind than the problems of foreign investors. So I think we can shelve this, come back in 1 or 2 years and talk about it a bit more. Next page. Okay, so I've laid out a bullish target, a bullish scenario for you for 2022. And as of Wednesday, when I published my outlook for 2022, our VN index target for next year is 1,898 points. This, I think, is probably at the high end of market expectations. I think most of the other houses that have published so far are looking at around 1,800. I'm okay with that, though, because what this implies is really just average PE multiples. So if we believe the consensus earnings forecasts are correct, which I suspect we have to do because there are forecasts as a group on the sell side, then all we really need to do is for the market to be at average price to earnings ratio in 2022, at the end of 2022, it would be at 14.7 times 2023 earnings. That's the average PE multiple at the end of the year since 2017. So that's the 5-year average PE multiple, 14.7 times, gets us to a target of 1,898. So just under 1,900 points, and that implies 29% upside from where it was on Tuesday. As I said, I think this is relatively high. You can make your own judgments. I don't think the PE multiple will change much. That's the y-axis on the left-hand side. But across the top of this chart, you can look at different outcomes for earnings. The base case, as I said, is 21% for 2023. If it's higher, then obviously the market result will be higher. If it's lower, then maybe not. Next page, please. Okay, thanks, Ben. So this is the money page, really. What do we like? As I said, we are an institutional research outfit, and we cover large cap liquid names. Basically, for 2022, these are the stocks that are our top picks. We've been overweight property since I think about September relative to the banks. And again, banks and property are the two largest sectors in the market, as you're aware. The property call has worked pretty well. The residential property developers have mostly soared in recent months. At this point, Vinhomes is our top pick in the sector because that's really the only name that hasn't moved. Smaller names may continue to rally, but I think the valuations are getting somewhat steep. And for some of those names, you have to look at their ability to obtain financing because to continue to grow, because the central bank is clearly looking to limit the exposure of commercial banks to the property market via its new guidance on bonds. That doesn't affect Vinhomes at all because Vinhomes doesn't require banks to purchase its bonds. It sells bonds directly into the capital markets. So I think Vinhomes is in a very good position financially. Obviously, it's the dominant player by far in residential property in Vietnam, and also it's one of the cheapest stocks out there for residential property. So that to me is kind of a no-brainer. Vinhomes is one of our top picks, and we're seeing a lot of foreign flows into Vinhomes recently as well. In terms of the banks, we're neutral on the banking sector overall. I think the stocks will do okay next year. My preference as a banks analyst is to own quality rather than high beta, high risk names. Our top picks there are MBB. Really, this is a very high quality bank with a low valuation. So its ROEs are higher than the sector's valuation. I think is about 1.5 times book, and that's just too cheap for a high quality bank. So MBB has a very strong story. I would also include ACB, which we just upgraded yesterday, as another undervalued high quality bank that I think has a lot more room to run. And of course, VCB, I keep that in there always because I think it's the highest quality bank in Vietnam. Of course, the valuation is not cheap relative to the other banks, but I think there's a reason for that. That is because it's a high quality name. Consumer names should continue to rally next year. I think what's surprised me, frankly, is that the retail demand hasn't really taken off in I didn't really expect it in October, but I figured by November that retail demand would be growing more rapidly than it is. But that's taking longer than we had thought. I think that this will be a theme for 2022 instead of the quarter. Within consumer names, P&J is our top pick. We've got Ben, who covers energy. Ben likes renewables. I like renewables. Green is good. PC1 is now our top pick in the sector. We don't like the thermal power producers. We've got sell calls on both POW and T2. Really, that's in the case of POW, the stock has been rallying on hopes for a one-off gain, but we think that that's overdone at this point. Lastly, in terms of next year, surging FDI and the industrial migration from China and all of the things that Dr. Yen was talking about in terms of export momentum gaining speed in 2022, that's obviously a big feature. Within our stock coverage, we like DHC as a proxy on exports and KBC as a really more of an asset play, industrial property being their core focus. So lastly, in terms of 2022, other things that people are going to be talking about, thematics, stimulus spending will obviously be important for Vietnam's economy next year. And it's a good thing too, because Vietnam really does need the infrastructure. So that's a positive for not just for 2022 GDP, but for the country's competitiveness going forward. FDI should start to surge again. So again, good for industrial parks. The last one is on SPACs and overseas IPOs. I don't know that this is going to happen, but obviously a lot of the big cap conglomerates are talking about it. And I think that that will definitely be a theme to watch in 2022. So last page. This is basically it for my summary. Again, we remain positive on the Vietnam stocks overall heading into 2022. Longer term outlook, of course, remains very bright still, given the solid fundamentals, strong liquidity outlook, and positive investor sentiments. So thank you very much for listening to my presentation. And I think I should leave it there and see you all at the Q&A session.
All right, thanks, Matt. Thank you so much. Okay, thank you for the stock ideas and topics. I like that section a lot. Thank you. I guess we're going to move on to the panel discussion now. So we're going to welcome back Dr. Yen Chen Hui, strategist from Yuanta Investment Consulting. And Matt's going to join us as well. Hello. Can you hear us?
Hi. How are you?
Thank you for a very wonderful presentation. I think the messages are pretty clear. For now, we're going to move on to the panel discussion, and we're going to take some questions from the audience. Again, we have gifts for 5 great questions from the audience, so please keep that in mind. And for now, I'm just going to throw out some questions to re-emphasize the strong messages that you guys already cover, and then we're gonna get some question from the live audience. Okay, so for Matt, I would like to follow up a little bit. Can you hear me, Matt?
Yeah.
All right. As Dr. Yen mentioned before, Dr. Yen mentioned before, inflation is the big challenge for 2022 coming up, and so how should investor allocate their wealth among different assets to, let's say, counter the impact of the inflation? What is your thought?
Well, I think I get paid to sell stocks, so my initial reaction would be to buy more stocks. But from a the point of view of trying to allocate capital, I think that clearly if inflation is an issue, you don't want to be holding too much cash. I think that's pretty obvious. Some of the workarounds there are to hold stocks. Stocks tend to do well. Earnings tend to grow nominal terms when inflation is high. Another thing to look at is property. I think everybody's aware of that because these are assets that tend to increase in value when inflation increases. I'm also a believer in holding some precious metals. I wouldn't allocate all my money to precious metals, and I'm not giving you any kind of view on gold price today, but I think it's important to have a little bit in precious metals or precious metal proxies such as miners as a means of almost like an insurance policy. So I would look at those assets, and I think I think that a lot of investors here are going to be interested in cryptocurrencies. I don't really see them as offsets for inflation. I see them more as speculative vehicles. I don't think that they're a very good store of value because their prices tend to go up and down 20% in a day. If you want to speculate, that's fine, but I certainly wouldn't borrow money to buy cryptocurrencies, and I wouldn't allocate more than 1% of my portfolio to crypto.
Thank you, Matt. I guess cryptocurrency is getting a big public attention from the Vietnamese investors so far this year. For Dr. Yan, what is your personal view on the excess allocation given we have inflation is still a big risk for 2022 coming up?
Okay. As in my presentation, I think inflation will retreat somewhat next year as supply chain struggle relax. However, inflation will still be higher than it used to be for several structural reasons, including, just I say, supply chain reshuffle, infrastructure. So I think rather than focusing on investment on inflation issue or load up on traditional inflation protection items, I recommend investor investing also in beneficiary of those underlying factors that ultimately contribute to higher inflation. The first factor I say, like a supply chain reshuffle, I think Vietnam is a clear beneficiary of supply chain reshuffle from China, and infrastructure related business are also good place to be. Because the best way to counter inflation is to make more money than inflation eat into your wealth, right? So don't need to be panic about inflation. Everything we all need to know is which asset class or which company can still be generate I say stable cash flow. I think that's a good item. Need to place money on it.
So I guess among property, gold, stocks, bonds, or even commodities, what seem to be the most attractive channels in your observation, Dr. Yan?
Oh, that's good. That's good. Currently and globally, we are in the, I have to say, we are in the later stage of recovery in this economic cycle. So investors should lower their bond exposure. Hence, property and equity is more attractive than bond. But remember, in textbook, property and equity, we deem it as a risk asset. But 2022 is later stage of economic cycle. Hence, investors' strategy should be barbell. Barbell, like they have to overweigh safe asset and overweigh risky asset to get their safe margin. Hence, investors should not expose too much on risky asset. That means you should not 100% on it. Hence, compared to 2021, because we are currently in a later stage of economic cycle. I think underweight bond, overweight stock, but investors should raise their cash exposure such as 30% to get their safe margin. That is what I suggestion.
Right. So stock is still the good access channel to focus on, and I guess we lower the allocation on risky access, right?
The bond.
The bond, yeah. Matt's already mentioned cryptocurrency. I'm just wondering, what is your take on cryptocurrency, Dr. Yan?
Okay, good. That's a good question. Okay, I'm really not, I don't love cryptocurrency. You know why? For economists, by monetary theory, three functions of currency: store of value, unit of accounting, and medium of trade. Currently, cryptocurrency is too volatile to serve the first two functions: store value, unit of accounting. Cryptocurrency cannot do this. And for the third, medium of trade, it seems to be less about saving the cost of moving physical money behind the scene under the SWIFT framework, but more about its anonymity, circumvent anti-money laundering, or revenue accountability. So part of elevated of cryptocurrency implies the cost of daylight. Not to mention, crypto market participants come to trade with very speculative mentally, which is also part of why it is so volatile. We have do empirical research. We find crypto prices to be closely intertwined with retail stock. Like, in American stock market, they say meme stock, like AME, GMC, etc. So cryptocurrency prices to be closely intertwined with this retail stock investors' sentiment. It provides an indirect evidence to such above argument. So before cryptocurrency gains status as the semi-legal tender like gold or legal status, it will be very hard to change the participant structure, retail participant structure enough to reduce volatility to the point that make a crypto a reasonable option for store of value, and things can pivot from that. And remember, right now trend is China, US, EU, and more governments are heading toward banning it. So I think people can trade cryptocurrency, but is there a long-term investment value? I don't think so. I think people can trade with cryptocurrency, but you should beware of risk.
Sure.
If I could just jump in there, I think another thing to think about is that not all cryptocurrencies are the same. And when we have something like Bitcoin, for example, it's obviously the big one, and Ethereum. These are cryptocurrencies where there's basically there's a cap on the number of Bitcoins that can be created. So there might be some value to that. I don't know how to price it, and I'm not telling you to buy it, but I think that at least there's not an unlimited supply. But with cryptocurrencies such as Dogecoin, and many other coins that have gone from 1 penny to $10 in the space of 2 months. That's great if you bought at 1 penny. That's wonderful, but don't buy it as a long-term asset, because the number of Dogecoins that can be created is infinite. We can create more Dogecoins than there are stars in the universe. So I think the as a storage of value, that really doesn't work, at least in terms of the economics that I understand.
Yeah, I guess the Vietnamese investors are so crazy about these coins nowadays, and especially some new coming projects, GameFi and other projects, metaverse projects applying blockchain technology, and they are so crazy about these things. I guess high risk, high return. And in Vietnam, as you know, for now, the Vietnamese government, we don't have regulation for crypto yet. That's why you have to trade at your own risk for now. And going back to math, you are based in Vietnam and follow what's going on now in Vietnam. Do you think the State Bank of Vietnam will increase the interest rate now following Fed decisions?
Well, if you look at if you're talking about government bond rates, I think there's plenty of room for government bond rates to move higher. I was just looking at the 5-year Vietnam government bond yield, which is about 80 basis points, and that's actually 40 basis points less than the U.S. 5-year government bond yield, which it's a bit strange to see something like that especially given how low the rates already are in the United States, for Vietnam's government bond yields to be even lower. But that's not really what investors, individual investors, buy. I think when you're talking about rates in Vietnam as it affects the stock market, I think you have to look at bank deposit rates, particularly state government bank deposit rates, as being the key quote unquote risk-free rate that investors in Vietnam use. Because why would I buy a government bond at 80 basis points when I can put my money in the government bank for 5%? It doesn't make any sense. So I think in terms of do I believe that the bank deposit rates are set to rise? My answer to that is no. And I think the main reason for that is the banking system requires support because of the credit troubles that have impacted many of the borrowers because of COVID-19. That means that the banks have to lend their money at a lower rate. And in order to maintain their profitability, which is really not about making money so much as retaining a certain level of capital in the banking system so the banking system remains solvent. In order to do that, they need to have lower borrowing costs, and their borrowing costs are our deposit costs. So when we put money in the bank is borrowing from us, and that's their cost of funds. I think that rate is likely to remain low. There might be some non-state banks that are offering higher rates as there are right now, at the end of the year. But I don't think that's really going to change in terms of the government banks. Maybe we'll see 25 basis points increase, but I don't think there's much room for state banks to raise their rates.
All right, thank you, Matt. Dr. Yan, you are in Taiwan now. I'm curious to know how the Taiwanese government trigger the economic growth given the situation now of COVID-19, and what seem to be the most attractive access and channels, sectors to invest in Taiwan right now.
Okay, that's a good question. I have to say, in the past, the 3 things that the Taiwanese government did the best to trigger economic growth is infrastructure and stable currency. Everybody knows Taiwan has stable currency. Our currency fluctuation is really mild. And education. Currently the world economy is on the transition to the digitalized world. Taiwan has among the world's highest digitalized education countries. As for the investing opportunity, I have to say, foreign investors come to Taiwan stock market usually for what we are good at, such as TSMC. That means technology. Technology is by foundry, and chip design, and a lot of components. This will generally participate and benefit from the tech mega trend. The tech mega trends means 5G and AI and IoT and EV, electricity vehicle. So the only thing you need to mind for us is the share price valuation. And no worry the fundamental, because the fundamental is on the mega trend uprising. But Taiwan stocks are also known for its very generous payout ratio and the dividend yield. Taiwanese names are often single business and simple business model companies, making it convenient for investors to research and cherry pick their desired position. So tech is our brand, so there is more than meets your eye if you are willing to just scratch a bit of the surface.
Thank you. I will love the tech sector in Taiwan. I think there's a lot of lessons to learn from. We're going to go back to the stock market outlook for the discussion now. For now, in Vietnam, given the increased public investment in Vietnam, which sectors should be the beneficiary of the, let's say, the public investment sentiment now in Vietnam, Matt? What kind of sector that we...
Yeah, I think that's, again, that should be a big theme for 2022. We don't cover construction names. I think among the stocks where we have coverage, property is probably the biggest beneficiary. And I don't mean that the government is going to buy property and that's going to be good for our stocks, but rather as this infrastructure is rolled out, and particularly urban transport infrastructure is rolled out, that this will benefit the property environment in the suburban District 1 type of areas. So that means highways. I think we just finally got our first subway system or MRT system running in Hanoi, and hopefully the Ho Chi Minh City line will be up and running sometime soon. That's all very positive. I don't think that these unlike other places such as Japan, where the government spends a lot of money on infrastructure that is not needed, only in order to boost GDP and to get votes from rural voters. So they spend $1 billion and they build a bridge that nobody uses. That doesn't happen in Vietnam. That's actually a very good position to be in, because the stimulus spending is not only good for GDP in the immediate term, but it also creates a lot of ancillary benefits. Think about the United States in the 1950s, when in Eisenhower years, when they rolled out the national highway grid after World War II. That created basically created the middle class in the United States. This is an environment where Vietnam stands to benefit as a whole. So it's not necessarily just for construction companies. I think property should do well. And over time, that means also that we'll get a return of consumer sentiment as well. So I would say that is a general positive for the macro, and specifically for our coverage, probably property names are the biggest beneficiaries.
All right, so property stocks, I'll keep that in mind. A question about banking sector. Banking sector is the biggest sector in terms of market cap in Vietnam stock market. How do you think about the outlook of banking sector in 2022? The key sector of the economy, the banking. What is your thought on this sector, Matt?
Well, I guess I would say that I'm cautiously optimistic. And what I mean by that is we've got a neutral allocation recommendation to the banking sector. I think the stocks should do okay, but not great. In the first half of 2021, the earnings for the sector grew by about 70% year on year. And that got a lot of people very, very excited. Isn't this wonderful? Problem is, I think that there's an underlying asset quality issue that has not really been addressed in terms of credit costs. If we look across the region, banks in Thailand, banks in Indonesia, banks in even Singapore, all took significant provisions in 2020 and 2021 on the back of the COVID impact. And that really didn't happen in Vietnam. I think instead what we've seen is NPLs, as reported, are officially relatively low. I think the number is 1.9% in the third quarter of 2021. So the most recent number is 1.9%. But there's also a large component of debt that has been restructured. I think it's if we add that into the NPL number, we get to about 5%. the restructured debt is not being classified as NPLs, and banks don't have to provision against it. So that's what my thinking on next year is, that what we'll see is recognition that some of these restructured loans are not going to be paid back, that they need to be downgraded, and that we'll see provisioning costs increase. So that's bad for earnings. But at the same time, as I said, I don't see a big change in terms of the interest rate environment. The banks are likely to remain very liquid, which means that their funding costs will remain low, and they'll have a decent spread between their lending yields and their cost of funds. So that's positive for the revenue side. At the same, and again, because we think that we're assuming now that we're not going to get back into a COVID lockdown type situation like we saw in the third quarter, I assume that that's not going to happen going forward. And under that assumption, we also think that the fee income for the banks is likely to grow rapidly in 2022, and primarily driven by bank assurance sales, which fell substantially in the third quarter of 2021 because, of course, the banks were in South Vietnam. The banks were largely closed, and so that's a very difficult environment to sell bank assurance. Next year, I think that we'll see a reversal of that, and likely a spike in bank assurance sales. That's positive for fee income for the banks. The third element of bank profitability is costs, and almost all of the banks, including MBB, including ACB, and including VCB, have been engaging in digitization of their back office operations and their front office operations. What that means is that their overall operating costs are not going to increase as much, and that certainly not as much as their revenues. So that means that their overall profitability before provisioning, pre-provisioning operating profit, should actually do quite well. So I'm expecting relatively strong PPOP growth, pre-provisioning operating profit growth, offset by higher credit costs, which means that earnings are not going to grow by 70% anymore. I think that's all done, in my opinion. But that doesn't mean that there's a crisis. I think that you need to have, as institutional investors that we serve, oftentimes they need to have some exposure to the banking sector because it is such a large component of the index. I think it's 40% roughly of the index by market cap weighting. And for that reason, we tell them to stick with the quality names, and that's why I have MBB, ACB as among my top picks, as well as Vietcom Bank. I think those three should be the highest quality banks that we cover, and that's where I keep my money for now.
Right, thank you. We have seen a huge rise of the stock trading accounts from Vietnamese investor in 2021, especially at the last 3 months, and it's continued to grow in 2022. What is your advice for the new investors as they want to be, smart investor and joining the market for the first time? Dr. Yan?
Okay, that's a good question. I should reply this question from two ways about the stock picking and market timing, because everybody know we are currently in the later stage of economic cycle. So new investors should have knowledge to identify which stock market price drop is just only a technical correction or beginning of a longer term market downturn. So let's first talk about how to pick good stock. I think 2022 is the year when the economy returned to normal, which also means the monetary policy will not be so loose. So this means that not all stock will rise sharply. I think stock selection should focus on companies' long-term growth and valuation. And I think a local investor has good opportunity in 2022. Why? As everybody knows, currently foreign investor flow to Vietnam mainly due to top-down reasons, such as solid economic growth reason, and stable currency and the supply chain reshuffle. But foreign investor has really little knowledge about Vietnam's industry. Not so many foreign investors has say complete research team in Vietnam. So they're investing in Vietnam. Most they're investing in Vietnam are big names. So for investor in 2022, retail investors should focus more on other opportunity. They will have a chance to get outperform return. And about the market timing, what is market timing? I have to say, currently we are in the later stage of economic cycle. The risk or the opportunity, the chance of a market beginning of market turn is rising. But who knows tomorrow? So we should focus on some indicators to identify yesterday's drop or last week's stock market drop, whether it is a new market downturn or just technical correction. I suggest the retail investor should look two indicators. First is US dollar. You know, in the circumstance of a systematic risk, US dollar will rise sharply. US dollar index will rise sharply simultaneously. So if you see a stock market turn yesterday or last week, but simultaneously US dollar is dropped, you can identify this situation is only I can say only a technical correction, like between the late of November to beginning of December, we have experienced a period of unknown about COVID-19 Omicron variant, and the stock market dropped sharply. But simultaneously, you can see US dollar is depreciate, not appreciate a lot. So you can judge this situation is only technical correction. That's really an idea. The second thing is somebody say interest rate is a factor we should watch next year. Okay, interest rate is really important, but not always interest rate rise will cause stock market to drop. Why? From textbook, how do we evaluate stock market equity price? Equity price, reasonable equity price equals company's future discount value of company future cash flow. You can see if interest rate rise is due to the inflation reason, company cash flow will rise simultaneously. So even in the interest rate rise situation, but if the reason is inflation, no worry about equity price, because equity is the inflation protection asset. But which interest rate should we focus on? Real interest rate. That means interest rate minus inflation. If interest rate minus inflation rise sharply, that's the problem. So I can say in reply this question, I have to say new investor should focus more on fundamental companies' longer term growth and valuation. For market timing, they have to have knowledge to judge whether the last few days stock market drop is a technical correction or just or the beginning of the new downturn. The two indicators, US dollar index and the real interest rate.
All right, thank you, Dr. Yan. I guess we have some question from the audience already. So I'm gonna read out loud some question so we can answer. The question is for Matthew? A question from audience Phạm Dương Duy. In 2022, it is expected that the Fed will raise interest rate to 0.9%, higher than the current 0.25%. Maybe the Fed will raise interest rate to 1.6% in 2023 to balance the inflation target at 2.5% in 2023. Interest rate can be increased 3 times. The first time is expected to be in the second quarter of 2022. Inflation in Vietnam lags behind the world. Will there be a tight monetary policies in quarter 2 of 2022 to balance the inflation? Is the stock market likely to enter a bear cycle? Matthew.
Yeah, thanks for that. I think we've sort of addressed some of that already. I think my expectations for the first half are relatively confident that we won't see a sharp increase or I should say a sharp tightening of monetary policy in Vietnam. There's several reasons for that. First of all, I think the Fed is basically tapering right now, so that doesn't mean they're raising interest rates, but maybe they will. Let's assume that they do, according to your scenario. Vietnam doesn't have the same level of impact on global commodities prices, which is really what's driving inflation. And also, neither the Fed nor any other central bank can use their monetary policy to affect the supply constraint, the logistical constraints of the global supply chain that are in place right now. That's not a function of monetary policy by central banks. That's the reasons for that is that the companies haven't been investing money. They didn't expect this very sharp increase in demand in the end markets, particularly in the United States, where retail demand is very high. So we might see the Fed move. I don't necessarily think the SBV will necessarily move in lockstep. Again, I wouldn't be surprised to see some tightening of interest rates next year, but I don't think it's going to happen in the first half. In my opinion, it won't. If it does happen, it'll probably be mostly in the money markets, and that would be bad for banks, I suspect, because it implies that their cost of funds will be higher than it is right now. So that would be a negative. But overall, I wouldn't expect a major tightening of the monetary conditions. I think a more likely scenario is increasing allowing the Vietnam dong to appreciate against the U.S. dollar, which is also a form of tightening, and it's a form of tightening that does help the inflationary pressures on Vietnam, because most of the inflation is actually from imports. So if the dong appreciates, goes up in value, that means that the price that people pay for imports in Vietnam dong terms will remain lower. So I would assume that we might see maybe some marginal improvement in the Vietnam dong. As of the end of November, we were up about 2% year to date, but obviously that's changed a little bit in the past few weeks. But I think the appreciation pressures are more likely to be a function of tightening in Vietnam than interest rates. That's my opinion. If I'm wrong about that, and if the central bank jacks up interest rates aggressively, then obviously that'll be bad for stock prices.
Could you guys give some quick answer, about 1 minute? Then another question for Matthew. Regarding the banking sector, I can see that the PB of the sector is now at the highest point throughout the time. Should we wait for discount? That's a question from the audience. The PB of the banking sector. Matthew?
Well, if you think the market's going to go down, then don't buy, don't buy today. So, in my opinion, the PB of the banking sector is probably not the right way to look at it. I would look at the price to book of and other valuations of each individual stock. So if you look at MBB, for example, it's trading at about 1.5 times 2022 book. relative to ROE of about 21, 22%. Frankly, that's a reasonably cheap valuation already. And if we believe in market efficiency, then MBB share price should rise. Its price to book value should rise in line with its solid ROEs. That's true of MBB. That's true of ACB. There may be some other names out there that we don't cover that are high quality banks but are trading at a discount. There are also some banks that just seem to rise in line with the sector that maybe don't necessarily merit that valuation. I'm thinking here about among the banks that we cover. I'm thinking about STB, which we have a sell call on, and maybe even BIDV. It's a big bank, big government bank, but I think its valuation doesn't make a lot of sense to me. Vietcom Bank, of course, drags the whole sector's valuation higher because it's trading at 3.5 times book. And that's kind of, it seems to be a permanent feature of VCB. So I would sort of strip that one out when you're thinking about the sector as a whole. VCB is not going to de-rate, in my opinion.
A question for Dr. Yan. Why foreign investors keep selling Vietnamese stock market? Vietnamese stock.
Okay, that's a good question. You see, till today, foreign investors sell what, $2.7 billion US dollar, you know? How much, do you know how much foreign investors sell in Taiwan stock market this year? 200 billion this year. Almost 100 times than Vietnam. Why? This is a mathematic problem. Why? In fact, in the past year, foreign investors sell Vietnamese stock market and foreign investors sold Taiwan stock market for the same reason. I would say that is rebalance. What is rebalance? Because most foreign capital allocate their asset across countries. Each country has a fixed ratio. Each country has a fixed ratio, which may be higher or lower at times, but it will not deviate too much from this benchmark. So when this country's stock price rise sharply this year, more than other countries, the ratio of his investment in Vietnam, in Taiwan will exceed significantly to this benchmark. So they will sell some to return to the benchmark. The ratio need to return to the benchmark. This is a mathematical problem, okay? So a phenomenon that you will often see is that when a country's equity price growth rate significantly exceeds that of another country, foreign investor will always sell stock for rebalance reason. What you really have to worry about is not foreign investors sell when stock rise. The really need you to worry about is foreign investors are still selling when stock market drop. That's the problem, okay?
All right, thank you so much. We are running out of time now. It's already 2 hours of discussions. So I guess we got to wrap up a little bit from Matthew and Dr. Yan. What would be some 1 or 2 important key takeaways that you guys want to emphasize again for the audience today about the topic of smart asset allocation and investment strategy for 2022 stock market outlook? If there are 1 or 2 key takeaways, what would that be? Matthew?
Okay, very simple. Don't put all your eggs in one basket. If you do and you drop the basket, then all your eggs are going to break. I think being diversified in your in terms of both your stock picks and your overall portfolio, and not just stocks but other assets as well, is very, very critical all the time, and at a time like this especially, because I believe the bull market will continue in 2022, but we've obviously come quite a long way. So maybe I'm wrong, And I think having a diverse portfolio allocation is the best protection against being overly concentrated in any single specific stocks or in stocks as a whole. I don't think you should put 100% of your money into the Vietnam stock market.
Thank you. Dr. Yan, what would be your most important key takeaway for today?
Okay, the key takeaway is first, 2022 global economy will back to normal and invest like normal. Okay, and second, be aware, 2022 still has inflation. That's real, but don't need to worry about stagnation because corporation has a lot of cash pile. So all you need to know, they will invest, and the consumer has a lot of saving. All you need to know is they will still consume. And the third, I have to say, this year, we have a lot of problem of supply chain problem. I think 2022 will be more normal. And for the last, I think the Vietnam market passed the worst. Next year will be more engine, and there will be a lot of opportunity. Thank you.
Thank you. I guess the fundamentals are solid, and there are some more positive signs coming up in 2022. And like Matthew said, don't put all your eggs into one basket. And thank you so much, Dr. Yan and Matthew, for sharing today. I guess that's also wrapped up our discussion for the live stream webinar organized by Yuanta Securities Vietnam. So thank you so much for watching, and I guess I'll see you guys next time. Thank you so much.
Thank you, Con. Thank you, everyone.